Speaking of D.C., our next guest sees more road bumps ahead for President Trump. Peter Schiff is the CEO of Euro-Pacific Capital, and he joins us now. Peter, I've been on assignment or vacation or whatever the last few times that you're on, so I'm glad to have you back today. Let's get straight to it and talk about the markets and what you're seeing. We just traded the S&P. It seems that the Trump trade is alive and well, and markets are continuing to fly high. What are your thoughts?
Well, I think the trade has unraveled a bit. Remember, early in the Trump trade, you had a strong dollar. The dollar has surrendered 100% of its gains post-Trump's election. And so year to date, even though the S&P is up, priced in gold, the S&P is actually down. And if you compare the U.S. stock market to other stock markets around the world, the U.S. stock market is one of the worst performing markets in the world. So it doesn't sound like the Trump trade is working. It sounds like the trades that are working are buying gold and buying foreign stocks. And that's what I've been doing. Well, gold's been bouncing around, but we're stuck right now, 1266. That's not exactly a massively successful trade, if you ask me, over the last couple of months. Well, year to date, it's up more than the Dow. It's up more than the S&P 500. And even though the S&P has made a new high, it's not much higher than it was a few months ago. So the U.S. markets have been pretty steady, while foreign markets have been much stronger. Emerging markets have been very strong. And I expect this trend to continue. And I think it'll accelerate in the second half of the year. OK, Jim's going to jump in.
The dollar's retraced everything, as you said. Is the dollar saying conclusively that Donald Trump's going to get no pro-growth policies through? And do you agree with it?
Well, I don't think it's really an indictment of Trump, more of the Federal Reserve. I mean, I think that even if the Fed hikes again in a couple of weeks, I mean, they're nearing the end of their tightening cycle. And, even though the Fed claimed to be data dependent and they hiked interest rates, despite the fact that the data was much weaker than they thought, I think the markets are starting to look beyond the hikes to the cuts. I think we're getting ready to start a new easing cycle. And on the other side of the Atlantic, the ECB is getting ready to end their easing cycle and to begin tightening. So I think the currency markets are more looking at that policy divergence than whether or not Trump is going to get anything through Congress.
Okay, Peter, but from a broader standpoint, and the fact that Donald Trump can't get anything done and we've lost confidence in that Trump trade, and it's unraveled, as you said, him being there and not having another administration that seemed to target corporations. Throw me a bone. Is it slightly more positive than the situation that existed 6-8 months ago?
Well, absolutely. Look, having a president who is business friendly as opposed to the enemy of business is a good thing. But look, the valuations are not going to help Trump. Remember, when George Bush took over from Bill Clinton, he was obviously more friendly to business than was Bill Clinton, but it didn't stop the stock market from collapsing because when he took office, valuations were extremely high, and we had the Fed propping up the market with aggressive monetary policy. I mean, not nearly as aggressive as it's been recently, but I think Donald Trump has walked into a similar situation as George Bush. So even if he's friendlier to business, it doesn't mean the stock market's going to do well under his presidency.
Peter, you and I haven't talked in some time, but you have come on the show a lot telling me that the Fed has no option but other than to institute more quantitative easing programs and that interest rates would stay at zero forever. That doesn't seem to be the case. What are the Fed's moves now?
Well, the Fed is still very close to zero. I mean, really, the target rate is still below 1%.
OK, but we're looking at potentially two more hikes this year.
Well, even if we get two more hikes, you're looking at interest rates that in real terms are negative. If you take the interest rate and subtract it from the inflation rate, even the one that the government reports, you're looking at negative interest rates. But if you actually look beneath the government statistics, look at how weak the economy has been. I mean, you can see that in the retailers that are blowing up, all the stores that are being shut down. You can see it. Look at the auto sales that are out again today. Look at the inventories piling up. Look at all the debt that consumers have racked up, credit card debt, auto loans, student loans. Look what's happening with labor force participation. So the economy is still weak despite all of this Fed stimulus.
Peter, you have to, of the things you just threw out there, when you said about retail, you have to admit that's more of a Jeff Bezos factor than it is of any sort of commentary on the consumer. You do not agree with that?
No, I don't. I do agree that more people are shopping on Amazon, but the sales at Amazon do not equal all the sales that are being lost at all the brick and mortar stores that are shutting down. Yes, the market share at Amazon is growing, but the overall market is shrinking because Americans are broke. They have lousy jobs, they have no savings, and they're maxed out on their borrowing. And a lot of Americans that used to have home equity no longer have homes. They're now renting, and their rent goes up every year.
Peter, bringing it back to D.C. and, your sort of take on the markets at this point. If Trump doesn't get any major policy reform through this year, what happens? Do we crack?
Well, look, I do think that we're going to get some combination of tax cuts and increased government spending through Congress. And it may be the reaction to the fact that we go back into recession and it's sold as a stimulus rather than as tax reform. But unfortunately, there's no real political courage among the Republicans to do what's right when it comes to tax reform, repealing Obamacare, and not replacing it with anything. We need the free market to solve our health care problems, not more government. And the other problem is Trump himself. When he ran for president, he promised not to touch entitlements. He promised to increase spending on the military. And we're not going to make any real progress on the deficit unless we cut entitlements, unless we cut military spending. So once you take that off the table, it doesn't really matter what they do with the discretionary spending because it's not enough to make a real difference.
Okay, Peter, always great to have you and to get your views.